Welcome everyone. We'll start our lesson. Today lesson will go through LO1, learning outcome 1. As you know me, my name is Anjum Satha. Please, if you have any question, drop me email anjum@ukeversity.co.uk and I'll try my best to get back to you as soon as possible. During our lesson today, we'll go through our LO1 and before we'll go through the unit specification, what we're supposed to learn. Okay, so please, if you have any question, those are listening this recording, please drop me email anjum@ukeversity.co.uk and I'll try my best to get back to you as soon as possible. Okay, the aim of this unit enable to understand that taxation. Will go through SME, small medium enterprise. We'll discuss about small medium practices and will provide the individual with the skill to prepare the basic calculation and other effect of the taxation impact on the tax decision. That will be the key, the purpose of the unit. Each lesson will go through, please, there are the 3 criteria: pass, merit, distinction, or of course, if you're not achieving, will be refer. Okay, so please, each lesson will go through one LO, which is one learning outcome, be able to calculate the tax for self-employed and complete the self-assessment tax return. So we'll go through self-assessment, explain the nature and the purpose of the self-assessment tax. We'll go through the taxable amount and calculate the payable for a given scenario, which will go through and complete the self-assessment return from the given data and assess the ethical issues arising in the course of performing the tax work and explain how they determine the tax status, that's a merit criteria, and evaluate the obligation of the tax system that's imposed. So that will be in our lesson 1. Lesson 2 will go through LO2. Lesson 3 will go through LO3, which is VAT value added tax. Okay, so this is the indicative content expenditure that's allowed, which is for the tax purposes, trading profit, basis of the assessment of employment income, deduction, rent, room relief, and we'll go through the premium, we'll go through the tax payable on the saving, dividend exempt, commute, and the budget of the trade, which will go through HMRC revenue, profit seeking motive, will go through the number of transactions, asset, all will be in our discussion, the tax status, the plant and machinery, trading losses, how we can carry forward and brought forward, and we can look the loss restriction apply to the partner and limited liabilities and the purpose and economics and environmental and the tax, that's all will be in our discussion. Our all discussion will cover all the key, the elements and the penalties and the taxes. If we not submit the tax return on time, what will be sort of the penalties will be. Okay, then lesson 2, learning outcome 2, and the lesson 3, learning outcome 3, which will go through accordingly. Please, we'll start. Okay, so today lesson is about LO1, which is be able to calculate the tax of self-employed. So what is meant by employed and self-employed? So employed mean if somebody control you and give you the job contract, there's certain conditions, start, finish time, and control by how many hours, that will be control, and you have to pay holiday pay, and that's known as the employed. So self-employed, you can manage your work yourself. You can set, the fees yourself, and afford the profit. That's up to you. So we'll do the self-employment. So if you register, we have to register the HMRC. We get the UTRN number, which is unique tax reference number. You all in working in account, so you're well aware of. So please, if you have any question, carry on asking. So scale 1 to 10 are always good to be, we reflect, how much already know about tax or the business taxation. Okay, so of course we'll go through the corporation tax, we'll go through the VAT, we'll go through the registration requirement, chargeable profit, and all will be in our discussion. Okay, so according to the Finance Act 2023, so please, really, we need to be apply the rates in the given scenario, the current rate. So that's crucial, really, we need to look around. We have this year 12,000 £570 is called personal allowance. If you earn more than that, we have a 20% tax. If you draw the dividend, 8.75. If you earn more than 37,700, £1, then is a 40%. If you earn more than that, that will be 45. So saving the income nil rate, which is 1,000 if you earn higher rate, taxpayer, the exemption is only 500. The dividend income is if all the taxpayer is up to 1,000 nil band, and after that, there will be a 8 point up to 37,000. So those we need to look at. Personal allowance, transferable amount which we can £1,260. Income limit 100,000. If you earn more than 100,000, your personal allowance will be reduced by 50 pence every pound you earn extra. So if you earn 125,140, your personal allowance will be finished. So days of residency status less than 60 days, automatically not resident and automatically not resident. No, previously resident. So 16 to 45 days resident if 4 ties are more the UK, automatically not resident. 46 to 90 days, 3 ties, which is will go through the ties, so the connected domicile and families, born and all these, we can look around house or main source of income. 91 to 120 days resident, 2 ties or more, not previously resident, then of course 3 ties we need to look around the condition. 121 to 182 days, so if 1 ties or more if you're not previously resident. Okay, 183 days or more automatically resident. Yes, if you live 183 days more outside the UK, your residency can be broke, which is approximately 6 months. Okay, so we can look around where the income between 50,000 to 60,000, the charge is 1% of the amount of the child benefit. Yes, receive every £100 of income over 50,000. So 100% property income finance costs are subject to the basic rate restrictions. So car benefit, which we can look around. So what sort of the car we have is a 51 gram, 54 gram per kilometer, 15%. If you have 55, it's 16%. Any additional is 2%. So with the electric car, then we of course is a 2%. So those we need to be look around the rate. Okay, guys. So electric range we can look around different, yes, mileage and all the car benefits. So those will go through the rent, pension scheme, authorized mileage, yes, up to 10,000 miles. Then is 45,000 first. If more than over than 10,000 is 25 pence per mile will be paid as a benefit of it. We can look around the main pool asset. We can claim the capital allowance that in business is really, really crucial to know. Between 18% and 8% in the main pool and the short life asset, those we'll discuss as well. So we'll go through the small profit rate is 19%. We'll go through the main rate is will go through 19, 19 and 25%. We can look around the upper limit and the lower limit and standard fraction 3 divided by 200. So we look the upper limit, augmented profit and standard fractions, which will go to 3 over 200. So that will be, which will be in our discussion. Please, if you have any question, you can ask, those we look in detail. Okay. So let's please we'll go through these. Yes. So of course, NI contribution, employers and all, the employer allowance which is available. Okay. So the tax purposes, the UK tax system, which we can look around. The type of the taxes, direct HMRC, indirect taxes. We look at an ethical framework, tax avoidance, tax evasion, of course, which is illegal. Tax planning is illegal. we can shoot case laws and HMRC guidance and we need to follow. Okay, so let's please, we'll go through, we have 1.1, explain the nature and the purpose of self-assessment. Self-assessment is the system HMRC and revenue customs used to collect the income tax. The tax usually deduct automatically from the wages and the pension and the saving. The people, businesses with other income must be reported in the tax return. We have a self-assessment return. We need to be gateway ID and we can do the self-assessment return. Okay. So we can look around self-assessment. Sole trader and partnership, they do self-assessment, trading profit, income, we do the gain on the disposable of assets or other gains, the capital gain, we calculate the income tax liabilities will not be required for this assessment. So we'll look around the tax years and the financial years. Of course, we can look around run from the 6th April to 5th April. Income tax rates are set, for the tax years. You will mainly concern with the tax years 20. So, because of course, you can look around 20, 23, 24. And the tax rate, which I'm showing you, the Finance Act. And of course, this is the example which we have, but we have to follow the rates, which is guarantee us that's, which we can look around. Okay, so guys, we need to be look around the self-assessment. When we do, we'll do the calculation of the tax, the main, we can look around corporated, uncorporated businesses, and we calculate the tax accordingly. So please, we need to look around the late payment, what fines will be. The 1 month late is a 5%, 6 month late is additional 5%, 12-month late, the additional 5%. Of course, we can look around the percentage, we look around the interest we have to pay on if we not pay the payment. Okay, so test your learning, we can look around the due date to fill the tax return, assume the turnover. So we can write, select the answer, the question, pick, which we can look around in a minute. So total taxable income and will be due, how much will be due. So we can draw boxes, we can pick, in a minute and we calculate. Okay, let's we'll go through the example. So in 2019 and 20, that's, the old assessment, but we have to look around the new rates, we have to apply accordingly. So Jamie's paid income for 2021, that year what the allowance is 12,000. Now, of course, we have now his income tax was payable 16,000. So we can look around the account will be reached and the insert dates, which date and Jamie's payment will be. So we can fill as self-assessment. Yes, those we can look around. Made 2 payments in 2020 payable 5,000 each and additional. So we can, so please, I included some questions these to look around, which we'll go through in a minute. Test your understanding. That will see the which date, the date, when the of the tax return. Of course, the following year on the 31st, you can do the payment on the account will be calculated as 50% of the income tax payable for 2019 and will be due 31st January, the dates, and 31st July are the following year, which we can look around in. So £100 is failure to return, £10 per day from 1st May and due filing and 5% penalty on the paid later. That's, which we can. And then, of course, we can pick the dates of the return and the penalty. So that's, some guide and demonstrate, the amount and the calculate the payable, the scenario which we can. I'm going to pick, give you a few examples to look around the self-assessment, which we can look around the activities we have, so how much is the income we have. If we have a losses, we can minus the payment, which we can look around how much is the proportion we can do in the years. I guess the dates and the return. So please, the final assessment. If we have a pay as you earn being deducted at source, And then of course we can look around if any capital gain tax we have, the final payment. All we need to be. So this is the few activities we've been given. So let's we look, the actual example from our booklet, which I'll give you. So we'll use those, I'm just sharing with you in a minute, and those will be used. Okay. So let's see. Okay. So guys, uh, we can look around here. So personal allowance for this year is 12,570. So if we are doing trading profit, let's say we have a trading profit in the self-employed is 184,000. Personal allowance will be, because anything 125,000, their personal allowance will be zero. We can look around the taxable income is 184,000. And then of course is first 37,700 will be 20% tax. Remaining up to 125,140 will be 40% tax. More than that will be 45% tax. So total liability, tax liability is 69,000 if you earn 184,000. So that's the tax liability which we're supposed to pay to HMRs. Any question from anyone? Okay. So you will see there for the tax year 2023, the trading profit is 159 during the year. Made, the net pension contribution, which is 32,000, net gift aid donation 69. And now we have, so we have to look around 159 personal allowance, because if you're giving gift aid and all of this, so we have to make adjustment those, and we have to make, so like make gross personal pension contribution is a 40,000. So 32,000 times 100 divided by 80, and then donation is 96. So we can look around accordingly, and now the personal allowance will be reduced, so the proportion, so which will go through. So now income is 149, so we can look around 37 is 20%, 52 at, and 60 to 30, which we can look around these, the income and the taxable tax liability 42,000 30. So we can look around. May adjusted net income is therefore is 107, because 159 minus 40 minus 12. So personal allowance, we have to look around, because 12,570 can be reduced to, because that's, we have to look around 107, which is 7,000 more. Yeah. So you have to look around half of 7,000 is 3,500 to our personal allowance. The basic and the higher rates are both extended by 52,000 40 plus 12. So that is the 52. So that's the reason is because, the extended rate is 20. So that's we can look around, and then remaining income will be paid at 40%. So please, yes, so we have to look around the pension and contribution donations, because, we can save on the tax. That's, the way we need to be adjust. Anybody, any question, please? Okay, so guys, that's we have, our LO1, and please, these are examples. Okay, so 31st January, end of the tax, we can cover 3 months, the notice, which return 31st October, we can initial penalty 110 pounds per day, maximum 90 days, 5% tax due, minimum is 300, 100% tax due if the deliberately concealed, 70% due if the deliberately but not concealed, and 5% is due, otherwise minimum 300. So we can look around this. Okay. So please, we can look around the penalties, errors, carelessness, deliberately, and those we can look around is 30% careless, deliberately 70%, unprompt disclosures, Yes, it deliberately, then of course from disclosure, so we can, the percentage will be reduced if you rectify it, and of course sometimes can be added. Penalties for the late notification imposed, does not notify chargeable for 5th October following and tax years. So 30%, 70%, and 100%. So we have to look around these accordingly and make adjustments. Okay, record must be generally kept until the later 5 years after the 31st January following the tax year concerned with the taxpayer or the business or the rental income or anything, and can be so kept, could be leads to the penalty of 3,000 for each tax year concerned. So we have to look around the payments of accounts. POA is must be made, on the 31st January and 31st July, and these, must be paid on the 31st January of the following years of tax. 50% are the prior tax year liability tax suffered. So these, further adjustment we have to do accordingly. So we have penalties. Yes, interest on the late penalties, as you mentioned, 5% unpaid tax, 10% unpaid tax, is more than 5 months, and 15% is more than unpaid tax. So we can look around interest run on normal due dates, and any final amount is CGT, which we got. So we corporation tax or capital gain tax, which we can look around those as well. Capital gain tax, yes. Assess, ethical is arise the course of performing the tax, factor considered if the asset you purchase is not a personal or the investment use, but the stock or the inventory, then indicate the trade. Briefly, the period of the ownership indicates which we need to be more frequently transactions are likely to be trade in the connected, which we need to be frequency is the similar of the transaction which we need to declare. Supplement work, yes, improvement, advertising and asset bought and enhanced and sold indicates if the force, sell because of the cash flow crisis, then we need to be disposal and we need to measure the motive, profit motive. So what was the motive behind, those we need to be look around these. So please, that's quite crucial. So use the, which we can, so firm, which is subject, ownership, frequencies, improvement, reasons of sale, motive. That's all we need to keep in mind. If the trade, then the profit are tax at the trading income. Those we need to be look around. Adjusted profit pro forma. So net profit per account, disallowable expense. We add the back like a depreciation. Income not included, but tax as the trading income. Income included, but not tax as a trading income. Expense not in the account, but allowed, like, the capital allowance, and then we can say trading profit, how much we have, which we can. Disallowable, so adjustment private expenses, honor the man estimate, agreed with the HMRC private use of and implied. Allowable, the salaries to the proprietors, of course, drawing, which we can look around. NI class 2 and class 4, trader own income tax, and the class 2 and class 4 disallowed, and implied salaries and NI allowed, so we leave alone. Unincorporated are not, bound by the Company Act, so we have to look around, increase the general provision, disallowed, and decrease the general provisions like bad debts and things, those we need to make adjustment because the rule is a 6 month or more. Item is not included in the account, item not included in tax. So good taken for owner for personal use, so we have to add it back, so we need to, because that come under the benefit in kind, so drawing, and we have to pay the tax on. Okay, expenses not included in the account, but allowable, the business expense paid privately allowable, therefore deduct adjustment of the profit computation or calculate home and office. So we can look around like a capital allowance difference to the company calculation, private use asset used by the proprietor or the owner, and separate the column of each asset to capital allowance if we can. Those we need to be look around. On disposal, the balancing allowance, which we can, the tax allowed, written down allowance, CO2, the car and their commission level, disposal and the market value, those we need to be adjust, maximum annual investment allowance, which is 1 million, and the written down allowance, which is scaled up down. So we can look around the main pool that all, the 14-month end dates of the long period of account, and unlikely the company still not, split into the period. So we have to look around these things, So trading allowance is 1,000 is available to the sole trader only, and the sole trader income is no more than 1,000 is exempt and does not need to be declared. If the sole trader income is less than 1,000 but their express is higher than, choose not to claim, trading allowance and get relief, from the trading loss. So if the sale trading income is exceed the 1,000, then of course can we choose deduct the trading allowance rather than the actual expense. So these, which we can income tax, and the self-employed to complete the main tax return, supplementary pages, if we have to look around 6 supplementary page self-assessment tool maybe appears, which we can in the real assessment, which we look around, and of course is you have to look around the self-assessment page, self-assessment form, which we can fill the different source, disallowed able expenses, allowable expenses, UK resident, non-resident, automatically resident, domicile if you're born in the UK, those, so we need to be the individual was born in the UK, individual had the domicile in the UK, individual was born resident in since or later are the conditions, at least 15 out of 20 years immediately preceding the tax, those we can look around. Income and taxable, of course we can look around the taxable and exempt income. So we can income from individual savings, interest, gambling, lottery winning, premium, most, these gain we need to be, these are exempt, income, grossing up, of course, salaries and all, and then deducted as source, we can minus those which already been paid. Unquoted company loans, which we can look around 20% deduct at source. So we need to be gross up. So the pro forma normally we use these in 2023 and 24, exactly the same, only the things carry on changing is the rate. Huh? Trading income, employment income, pension, properties, others, yes. So please, we can round up and then we can calculate non-saving income. And now, of course, tax rate is 20, 40, and 45%. So, of course, we can look around dividend, saving income, those we can. So 8 points. So that's, we need to be look around the rates. And as I mentioned, please, guys, those are, we'll upload, this handout, which is quite good, the plenty of examples. So we have to look around from this handout, which is, we have a lot of, the employment income, trading income. And it's good to go through a few examples that will help you clear the concept, and it's the latest rate, which we apply. Anybody, any question? No question. Okay, thanks for attending today's lesson, and the next lesson we'll go through LO2, and have a lovely week, and speak to you all during our next lesson. Thank you. Bye-bye.